Hey guys, Jason here for Chart Guys. We are taking a look at BA. It was a beautiful trade setup that was shared to me by a member of the community. I saw it, recognized its beauty and glory, and shared it with the rest of the community. And there were a lot of traders who were able to benefit from the setup. So what I want to do is talk about the setup, why the setup was important, and how we actually executed it. So we're going to check out, we're going to analyze a bunch of time frames, and we're going to look at the trade as we saw it using the chart replay feature and where our stop losses and entries were, yada, yada, yada. I've got a bunch of chicks here in my office. Yes, I am a farmer. Yes, they are loud, super cute, but you're probably going to hear them. We'll just deal with that as I get distracted by their cuteness and their noise. But let's get started at the BA and the daily time frame. So the reason this jumped out at me in the daily time frame was that we had a beautiful inside bar setup. An inside bar is a candlestick that fits entirely in the range of the previous candlestick, and what it does is it shows this compression. Now there's two things that can happen with an inside bar. You can continue to compress and show that imbalance and equilibrium as the price waddles and dawdles inside the range, creating more and more inside bars. Or you can break one of those thresholds and see which direction the market is interested in taking the price. Generally, when we see a break of a high or a low of an inside bar, the market likes to continue in that direction. It's a decision after a period of indecision. Now what happens here is almost the opposite of that. We see the bulls make a bull break over 236.77, but they fail to capitalize on that. So either the bulls aren't here or they're not interested. Either way, it doesn't matter. It gives an opportunity for the bears to push the price to the downside. So momentum has a shift from upside to downside. So we come into the day with a downside bias, even though we had a green candlestick the day before, because the bulls were unable to capitalize on their bull break opportunity. Now, when we combine that with the fact that we are short bias on the market in general due to technical setups in the overall market, that adds a little bit of a fever pitch feeling to beautiful short setups like this. We see weakness before the market even sees weakness. So if we have a really, really red day on QQQ or SPY, as we did for the majority of the day, that is only going to help short positions like BA see their maximum potential. So with the market on our side and a daily inside bar reversal, what are we looking for? Well, we're looking at a few different things actually. So let's clear our charts. Because we had a failed break yesterday and we have a low of 233.81. Now, I should have just said this before. We're looking at the chart as we would have seen it just before the market opens using the TradingView chart replay feature. This is 233.81. It is the low of yesterday. Because we had that failed bear break, we're looking for the bears to push the price under 233.81 to show that full reversal in effect and maintain full control of this chart. If they're able to break 233.81, a couple of things are going to happen. First of all, our intraday traders are going to be in full control to the downside. All of those traders on the 5-15 hourly time frame, maybe in the 4-hour time frame, if we wait long enough, are going to be bearish. If they can trip 233.81, it is going to trigger the stop losses that may be set at 233.81, and it is going to activate short traders who are interested in trading on the daily time frame. If those two factors, in combination with the already active bears on BA, work together, they may have the capability of pushing the price all the way down to our next daily support level, which is here at 232.70. If they can do that, then they're going to activate a brand new fresh round of stop losses to flush the price even further. Now, this is when it gets really, really fun and interesting. Let's go jump to the weekly time frame. The weekly time frame on BA has its own inside bar. So let's go take a look at this low, because if the bears, once they break 230.70, can push the price all the way to 231.80, then we start to activate the bears who are interested in shorting on the weekly time frame or stop losses that are set on the daily and the weekly level of 231.80. So we start getting bigger and bigger groups all working together to push the price in a certain direction. And when you can get multiple groups working together to push the price in a direction, it tends to move very, very quickly, and no one wants to stand in its way. Now, when we get an inside bar bear break, if we break 231.80 and activate all of those stop losses, then we look for the price to hit 230.22, because that is the next target on the weekly level. So this is why BA was so beautiful. We had an inside bar reversal. If we are able to break this low, this is our target. If we're able to break this low, this is our target. If we are able to break this low, we don't have any other support until 230.22. And if we are able to break that low, well, it's a long way down from there. So there's not a lot of working against this trade in a overall weak market setup that we saw on SPY and QQQ today. So let's walk through what this actually looked like. Now, before we do, I want to show you visual learners a really crudely drawn explanation of what's happening. This is how I understand it, and maybe this might be the key to help you understand how timeframes work. Yes, it's not good, is it? Okay, so here are the bears and here are the bulls. Yes, round ears, little spikes. We're playing tug of war, and inside the intraday time frame, it's a relatively even battleground until one group gets a strong upper hand by having the 15-minute time frame or the hourly time frame working in its favor. It really can go either way. So the key here is that if the bears are able to cross that daily low and activate the stop losses and traders on that next time frame, these traders over here are able to help this bear pull the price even further to the downside. Now, if they are able to work together and cascade that action together, they're more likely to be able to hit the next major level and activate the big nasty bears who like to trade on the weekly time frame. Now, if we can get these weekly bears involved and the daily bears and the intraday bears are all working together to crush the price, then they have a very formidable team against which the bulls have no hope. Now, if we can go and get into the monthly time frame, then we're really playing with fire by having the monthly bears also pulling the price down, and that would be quite significant. Well, I think that's enough poorly drawn art. Let's get started and take a look at what happens to BA on this beautiful trading day. I've changed the colors a little bit here. We can see that our daily levels are a yellow dashed line and our weekly levels are the pink dashed line. So one thing I also want to be clear on is our targets. If we break the low of 233.81, our target is going to be the next low. If we break that, then our target is going to be the next low. If we break 231.80, our target is going to be 230.22. I'm interested in hitting all of these. I'm going to see what sort of strength the bears have as they head out of the gate. So let's take a look. We're going to jump to the 2-minute time frame. This is the look of the market right before the bell. So what I'm interested in doing is taking a position pretty much out of the gate, and I'm going to set my stop loss relatively early, and it's just going to be a new high. And that's something that I post in here. Where was that guy? Yeah, so looking for a quick drop. My stop is going to be the high, and then I'm going to watch for that first little bounce attempt beyond my target, walk the stops down after that. So my target is that low, that 230.22 level, if we can get there. I want all these things to chain react, because that chain reaction setup that we see right here that we talk about is really key. We want all of these things to pile into each other and get all these time frames working together to help us out for this trade setup. So let's get started. 2-minute time frame out of the gate, we see a little bit of a pop pre-market, first high, failure to get over that high. I am now in the trade. Stop loss is a new high a day. I'm not letting these bulls do anything against me. I believe this is going to be a good setup. So we see right away that comes into play. We just dawdle for half a second. Bears push the price down, crush 233.81, triggering stop losses set at that level. We cascade again, triggering all the stop losses at 232.70. And again, we hit 231.80, and we are pushing the price even further. Now we are activating traders on the weekly time frame. Those traders wake up, stop losses activated, shorts taken, push the price down. We're almost approaching our target, and you know what? That's close enough for me. I'm going to take half of my position right before we hit 230.22. I am happy with that. So now I have broken my position up into 4 chunks. I am out half at my target. That's just the way we should be doing things. Have an entry, have a stop loss, have a target. Take your profits. So as we're watching this develop now, I'm still looking well below our low here. We don't really have any support to 222.58, and that's a very aggressive target, which I believe I called just a very significant target. And, you know, we've got to move our stops down because we're unlikely to go that far. We've taken half off, and now we're going to move the stop to the high of the initial bounce. The rest is going to be break even. That's what we do here. So we are moving our price down. I'm going to set half. Going to put my little stop loss right here. Let's make that a better color. little different. What are we going to use? Let's go green. No, red. And let's get rid of this guy. That'll be your stop loss. Now, the reason for that is I want to be able to give the bears a lot of room here. If they can get all the way down there into the 220s, into the 213s, it's going to be a beautiful short. But I also know that my target has been hit, so that can work against me relatively quickly if I'm not paying attention. So I have one quarter at 231.23, just a new high, and my other one's break even right now. So the price continues down, goes further and further. Now we see another little stop. I moved my stop loss right here, walking this down on the 2-minute time frame. Remember, the bears have already done the job. We have to give them the ability to take a rest. And when they take a rest, the bulls are going to step it up. So we see the price come down even a little further. And what do you know? I am stopped out. The rest is break even. Now, because I'm already very comfortable with my profit and I still have one quarter still riding up at break even, I have a lot of flexibility to allow the bulls and bears to battle things out and still remain in a very profitable position. So over the course of the morning, we see the bears continue to push the price down. And I just start walking my stops down. And now I'm happy with another lower high, 227.92. What I go and do is I take my stop loss. I move that there. I believe it was just under. I did post it in the room. Where was that? 227. Yeah, 227.88 was my stop on my last little bit of this play here. Who knows what the bears are capable of today? But we don't want to get on the wrong side of the bulls. And as we see, I get stopped out here for my last quarter of my position. So overall, a really, really nice executed push to the downside. Now, the reason we didn't hit that 222.58 level, well, that would be an exceptionally bearish day. And without news being able to drive through severe oversold conditions, it was just unlikely that we would see that sort of follow through. We did just dip into 4-hour oversold territory. So a nice little target for bulls to look for an entry. We saw a nice V-shaped recovery on the hourly time frame. And overall, just a really nice use of multiple time frames to get those beautiful bearish entries. So hopefully that was helpful. Certainly a lot of fun. Keep an eye out for weekly setups and daily setups that can trigger each other. If you have a daily inside bar setup that is going to break bullish, and if that breaks bullish, it activates traders on the weekly time frame, or perhaps you have a 15-minute inside bar that if it breaks bullish, it will activate hourly traders. And if that breaks bullish, it will activate daily traders. Think about teams working together. What needs to happen for you to get back up on a trade? That's the key, I think, for using these multiple time frames. Clearly, very effective for BA today. Thanks for watching. If you have any questions, please let me know. I love answering questions about technical analysis. It's what I do. I love it so much. That's it for today, guys. Thanks.